hope and your freedom and financial independence may be closer than you actually think, but it's gonna require you to do things differently. Now, if you want to do that, doing your traditional financial plan, saving your 401ks, saving with your financial advisors, you got to have $4 million. Why? Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. The show is yours. Those of you that are working so hard for your money and you're now ready for your money to start working harder for you right now. You want that freedom and cash flow today, not 30, 40, 50 billion years from now, but you want it right now to live that life that you love with those that you love while they still love you, while they're still around, right? But on top of that, guys, it's not just about getting rich, it's about living a rich life, because as you're blessed financially, as you do become work optional because you have enough passive income to pay for your bills and you start to really prosper, that is when you're able to have a greater impact in the lives of others by creating a ripple effect, by blessing more lives. That is what it means to be a Rippler today. Thank you for tuning in and being a part of this movement, because without you, there would be no ripple effect. This goes beyond Chris Miles. In fact, that leads me to my invite for you today. Whether it's this show episode or even just the show in general, I invite you, think of one person maybe you're already having these conversations with that you would invite to come listen to this podcast or watch this show. Because here's the truth, guys, is that they always talk about, Jim Rohn says you're the average of the 5 people you surround yourself with. The best way to elevate your wealth and elevate what you're doing in your life is to bring people with you as well. Elevate the conversations you have together. One person, that's all I ask. If there's more people you want to invite, great, but invite those people to listen to the show to see how we can bless their lives and create a greater ripple effect, because this is needed right now. The truth is, financial advisors aren't cutting it. Financial experts aren't cutting it. This is the answer. This is the place. So please do that right now. All right, guys, so getting into this topic, how do you become financially independent in 10 years? Is it really possible? Can it really happen? Here's one thing I'm going to say as a disclaimer. Everybody's situation is different. I'm going to explain this as how that impacts things. For some of you, this may or may not be possible, right? For others, it could be, right? It really just depends on the situation. But I know a lot of you that have reached out to us, we see it sometimes that you can do it in less than 10 years. Maybe it's 15, right? Which is still better than maybe never doing the stock market stuff. And in some of your cases, you come in and I'm like, you can retire this year if you wanted, right? So first and foremost, if you're trying to become financially independent, what is financial independence? Financial independence is when you have enough passive income coming in to at least pay for your expenses every month, right? That's what it basically is. You're able to pay your bills without you having to work for it. Your money is now working harder for you, so you have to do the work for it, right? That's financial independence. Now, financial freedom, I'm not talking about financial freedom. That's a whole nother level. Financial freedom is really when it says I can do whatever the heck I want with whomever I want, when I want, which is the ultimate goal, of course, right? But at least getting to that first step of financial independence is critical. I don't care if you're a W-2 employee or you're a business owner that at least wants to be work optional, where you're only working in your business because you want to, not because you have to, right? That's the beauty of it, when you have that actual freedom from having that kind of financial independence. Now, if you do it the traditional way, I'll give you the easy answer. Let's just say that you wanted $10,000 a month, because that's a very common thing we get. If you're in the medical fields, doctors and dentists, I often hear 20, 30,000 a month is very common. Whatever your number is, the big thing is you got to know what that number is, of course, that you're aiming for. But a lot of times 10,000 a month or 120,000 a year is the number I'm getting today. Now, if you want to do that, doing your traditional financial plan, saving your 401ks, saving with your financial advisors, you got to have $4 million. Why? Because that $4 million kicks off 3% a year, because you should not be pulling off more than 3% a year if you don't want to run out of money. By the way, if you're trying to retire early, like you're trying to do the whole FIRE movement, financially independent, retire young, retire early, that'd be fiery. If we did retire young, we could do that one too. Financially independent, retire early, that movement with people in the 30s and 40s, you better make it a 2% rule. That means it's not $4 million if you want to live 120,000 a year. Now we're looking at more closer to like $6 million instead, right? Now, I like the 3% rule, especially for somebody who's trying to retire maybe by around the age of 60 or older. That's pretty good. Now, if you're retiring in your 70s or 80s, you could probably pull off more and get away with less, but that's just because you're gambling that you're going to die sooner. And I'll tell you, my own personal experience, I have my own family members that you swear they should be dead. based on their health, and then somehow they're still alive. And then there's those that passed away that we thought they should have lived forever. So there is no guarantee in life, right? But when it comes to the mutual fund, traditional financial plan, if you're using mutual funds, you probably should be pulling out more than 3% a year. So if you want 10,000 a month, 120,000 a year, you need $4 million. And that's in today's dollars. So if it's going to take you decades to get there, just guess what? That number just keeps climbing on you, doesn't it? Right? Because every time inflation doubles, now that 4 million becomes 8 million. If it doubles again on the way there, you're going to need 16 million and so on. And that number, you start to try to do the math, you realize that almost feels impossible. Now, I'm not going to talk about that because that is depressing, especially when you factor in real rates of inflation. You have to almost take away inflation to feel better about yourself, right? But when you actually look at real inflation, it does get depressing because it is like a Dalmatian chasing a fire truck. You keep chasing it, doesn't mean you're ever going to catch it, right? So let's talk about the alternative to that, which is what we talk about on the show so often. Cash flowing investments, right? Things that create real passive income and they're backed by real investments like real estate, things that have real assets that back up your investment and pay you income. This is the key because this is what I had to do. I had to shift this perspective for myself. I was a financial advisor thinking if I could just save up $2 million by the time I'm 40, I will live on 3%, live on 60,000 a year, 5,000 a month. And for me back then, over 20 years ago, 5,000 a month sounded amazing. But with inflation, 5,000 a month is probably more like having 150,000 a year today in today's day. And so as a result, that's why, heck, and now I'm going in my mid to late 40s, right? For me, I would have moved that target even more. If I want 150,000 a year, guys, I'd have to have $5 million saved up, not 2 million, 5 million saved up. And I would have to pack away a lot of money. So I'm here to give you hope because you can actually do it much sooner, but you have to reverse your mentality, get it out of the accumulation mentality where you try to live on less than the interest, which is exactly what the banks and the financial institutions and the financial advisors want you to do because their income increases as time goes on, but yours does not. Instead, I give you an alternative route, right? This became apparent to me. I mean, even with one of our clients, we had one of our clients had $1 million, sitting there. Financial advisor said, "Hey, you can live on 30,000 a year." He said, "Well, 30,000 a year, guys, I'm living like a pauper. Like 30,000 a year, I'm basically living below the poverty line as a millionaire. What can I do that's more?" And so when he came to us, we started looking at things like different types of real estate investments, not just rentals, although he did look at those too and even got a few, but he looked at like apartment investing. He even looked at like things like oil and gas in different spaces and was able to get himself to where he made over 100,000 a year versus just 30,000 a year. Same money, just working better and harder because it's generating income. And we don't even have to cut into the $1 million. That's just profit. That's income that's coming in from that money. It's just about getting your money working harder so you don't have to, right? Well, let's talk about that here because this is what it comes down to. It's all about the income, right? Stop focusing on the net worth, stop focusing on the balances. How do we get the income to pay you more? That's the key. Now, let me show you an example of what it could be. Now, let's just go with that 10,000 a month, 120,000 a year example. Now, I'm going to use something that I've actually shown before because many times people will say, like, "Well, how's this work? Like whole life versus savings?" Well, I'm going to talk about the whole life component. Again, whole life is not required to do it. And I'm going to show you why. In the yellow here, if you see on this page, I'm showing you they have 250,000. Many of our clients usually have at least $200,000 that they want to invest and do something with. So I took somebody who's 250,000 that we're going to invest. Now, when I have people, even when they do other stuff, I don't have them pull out of their investment money to put in whole life. That's why I'm using this example. Now, 250,000, and also that they're saving 30,000 a year. So they were already like saving 30,000 between savings, 401ks, and everything else. But now they're trying to get liquid. Remember my advice I give all the time: get lean, get liquid, get out. Get lean means you start tracking your money, make sure that you're being wise and responsible with what you're spending on, but also increase your income. Get liquid means getting your money available and liquid. Keep it away from things like the 401ks and the IRAs that lock it up and you can't access it. I just today we had somebody who's like, "I want to work with you guys, but I just want to let you know out of the 400,000 I have to invest, 300,000 is with my current employer's 401k." And we had to tell him, like, "Sorry. I mean, we could still help you, but it's not going to be as good of an ROI, in my opinion, that I would recommend you hire us." So I would actually recommend that you don't quite qualify yet because, yeah, really, if you would pay taxes less than 100 grand to work with, And so just so you know, like just because you have money doesn't mean anything. So if you lock them up in 401ks, that money's locked up. You can't do anything with it, regardless of the freaking stupid, match that we talked about in an episode before, right? We talked about the myth of the match and other lies that come to 401ks. Don't get your money locked up there. So this person, 250,000 they can invest, plus they're saving 30,000 a year because they're trying to get that money liquid. Even if they just throw it into a savings account, watch what happens here. You have 250,000. If you make 10% a year, which is kind of the low end of some of our investments, right? 10% a year on 250,000 is 25,000 a year. So 25,000 of passive income from that 250,000 invested, plus this person was already saving 30,000 a year. Put that together, you get what? $55,000. Now, after 1 year, that 55,000, the cash flow between the money you've been saving plus the income you've been earning from passive income, put those together, you put that, add it to your 250,000, you now at 10%, the 55,000 gives you a 10% return of 5,500. Now you go from 25,000 to 30,500. This is what I refer to as that income avalanche, right? Growing that income and keep building it and building it. Now, the next year, now you have 30,500 on top of your 30,000 savings, which gives you 60,500 to add on top of that, whatever that money was now, compounding on top. That makes just over 6,000 cash flow from the 10% on that money. Now you're at 36,550. Notice after 10 years, you're at about $112,000. The next year, the 11th year, you're there. That's if you just use your savings. Now I do show on the other side, if you want to shave off 1 year, instead of making it 11 years, do it in 10 years or less. That's why I show using infinite banking in coordination with it. Even though in the beginning, you have about 1,000 less of cash flow a year because costs come out of the life insurance. Now, this person still invested 250,000, but now they're putting their 30,000 a year inside their whole life plan, right? Doing that. Now, there's not as much in the whole life plan to leverage. You can't use all 30,000. That's why there's only 22,000 to invest. Cash flow increase, and I even take out the loan, stuff and everything else, 4,700. That's why it's 29,700 in first year, even though it could have been about $1,000 more a year. So yes, for the few years, it is a little bit, it's lagging behind. But because the whole life pays better than even just a simple checking or savings account, eventually it catches up, which by the end of year 10, you get to 121,000. So you actually get to that $10,000 a month because you'll have all that extra money still there and building and compounding inside the whole life policy. But if you didn't have at least 5 or 10 years to do it, the whole life won't win, right? The whole life will actually kind of hinder you or push you back about a year versus put you ahead a year, like in this example. So I'm showing you that because that's kind of how it all works together. It's not about the infinite banking is the answer. No, that's not it. It's the investments that's the answer, but it's always nice if you can throw a little extra gasoline on the fire to speed it up, right? Now, you may be in a different situation. Now, you might be in a better situation than this. You might have 300,000, 500,000 to start with, right? But you might have higher goals too. You might want more than 10,000 a month. You might not. You might have a goal of $5,000 a month, right? Maybe it's only 5,000 a month you want to get to. I have a client that he's actually more of an infinite banking client, not so much on the investing side, but an infinite banking client that he showed me his little plan for how he was going to do it himself. Let me show you what that looks like. Okay, so you see this guy's plan here. Now, he already currently has a few turnkey rentals. He even had like a little extra money in a note fund, things like that. His current cash was at that 1341. And his goal is showing to me, he's like, hey, well, here's in 2024, Chris, I'm planning to buy 2 properties to cash flow. And this guy's been putting away about 15,000 a month. He's also in saving money in life insurance too. So he's been putting the money away, trying to just take the cash flow to buy more properties. So he's only buying about 1, maybe 2 properties every year, just smaller turnkey rentals, getting the cash flow from those. He was estimating about $300 per door, not even showing increases, right? He's not even showing any kind of increase in that. So if there's ever any repairs or other expenses that come out, he's not counting on that money. He's just counting on cash flow being the same. But notice by 2029, he gets to 4441. Now I told him, I said, listen, 4441, that's good, but you're not quite to your 5,000 a month goal. He said, well, Chris, I got my life insurance because the cash value in that, I'm actually pulling off, and you see at the top here where it shows 4250. Actually, that should show 4441. But anyways, 950 would actually bridge the gap. Now I questioned it. Now he has a policy with us, and so I looked it up, ran an in-force illustration, and he's right. By that year, he could actually pull off tax-free about $950 a month for many, 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 many years. Just let it support itself. So even on a smaller scale, right, this is possible, especially depending on the type of asset you buy. Granted, now he's thinking that he's going to cash flow pretty nicely. Markets do shift and change. It might take an extra few years, but what if it did take an extra 3 years beyond this? Would that be so bad? He would still be able to accomplish it in about 10 years, right? And that's my point. So let's just say we're taking an interest calculator here, right? Because what if you're in a situation where there's not a ton of cash flow right now, maybe not a ton of cash to invest, but what could you do? Like here, you got $150,000. Let's say you're just starting with that, which is kind of like the bare minimum we like to see our clients have to start with so they can diversify. And let's just say you're only saving $10,000 a year, right? Now, I say only, right? Because I know there's other people that are saving more. Just if you're saving 10,000 a year, you're doing better than the average American. So if I say only, it doesn't mean that that's a bad thing. I'm trying to create contrast in the sense that it's not like you're packing away 20, 30, 50,000 a year, right? I'm just saying you're doing 10,000 a year savings. Okay. Now, if you got that 10% interest rate, and of course you keep compounding these numbers, right? You keep compounding the income. Notice that after 10 years, your ending balance is $564,000. Now, again, because you're being paid 10% a year, that means you can live on about 56,000 a year that you're getting paid in cash flow. That's not, as you can see here, that's not the 120,000 you were going for. Now, if you're going for 56,000 a year, about 4,500 a month or so, 4,700 a month, awesome. You're going to be happy here, right? But if you're going for 10,000 a month, this won't be quite there. But okay, let's just say you didn't get there, but you got there in 17 years. Guess what? 1.2 million, making 10% is 120,000 a year, also known as 10,000 a month. So it might take you 7 more years in this kind of scenario, assuming that you can't put away more money every year, and you're starting with where you're starting. But I'll tell you, that's a heck of a lot better than trying to figure out how to get to 4 million from 150,000, only contributing 10,000 a year. You do the math on that with even just a 9% return in the stock market, which is pretty good. That's better than most people are getting. But let's just say you get 9%. Guys, it would take you decades, right? And that's assuming that inflation is almost nothing, right? So there's definitely possible. Now I threw in 4% inflation rate. You might look at this and say, well, okay, that's almost like the equivalent of maybe 60,000 a year or 5,000 a month. It could be. Right? You're right. The longer it takes, the harder it is. Well, what if I put it back to this 10 years again? Let's say you're going to be able to save 20,000 a year. You're like, hey, I've been max funding my 401k. What if I didn't do that anymore? Well, guess what? Now that number's looking a little better. Now it's not there. It's not the 1.2 million we're trying to get to, right? But again, if we give ourselves, let's say 2 more years, what happens? Getting closer, 2 more years. Now you're almost there, right? I'll even put it at 15 years just to make sure we kick the butt out of it, kick the crap out of it, right? 15 years, saving 20,000 years, starting with 150,000 could get you there. Now, if you did 30,000 a year, it's even better, right? Like I have some clients that are doing that right now. They're trying to find and free up cash any way they can, especially business owners, right? If we can save them money on taxes, a lot of times we can save at least 5 or 10,000 a year on taxes alone. What if we can start being disciplined, take that money and put it away? 30,000 a year just gets you there faster, right? It won't be 10 years, but even if I didn't, 12 years, right? Same thing. Now the amount of cash you have does make a difference. Let's just say all of a sudden you got a cash out refinance. I talked about that in a previous episode, right? Cash out refinance could get you there faster too, right? There's just so many possibilities, that are there. I get some people that come to me and they're like, hey, I've got 350,000 and I'm saving, maybe it's 20,000 a year. Guess what? 12 years is more than enough time to do it. You could probably do it in about 10 years, right? So it does vary. The variables that do help you get there is one, how much cash do you have to start with? And then two, also is how much can you keep adding to it? Can you be disciplined for the next 10, 15 years or less, depending where you're at, so that you can have the freedom for the rest of your life? Now, here's the problem. Many financial advisors are telling you to be disciplined for the next 40 to 50 years, saving your money, only to find out you live on a fixed income budget and you're begging for Social Security, right? Notice I'm not even planning on Social Security because one, a lot of our clients don't want to wait till they're at least 62 to 67 years old before they tap into their Social Security. They want to have some life now. They want to have some freedom now, right? Maybe you're the same way. I mean, that's kind of the people that I talk to here. You might be in your 50s or 60s. You might say, I just want the freedom as fast as I can get it. Well, how can we convert this stuff to cash? I'll tell you one couple that we helped them. They wanted to get to about 4,000 to 5,000 a month of extra passive income. Well, one thing we did is we sold their house and they started renting because they were able to get 400,000 out of the house. Now, what if you have $400,000 to start with, right? Now you have 400,000. Now they weren't able to save a whole ton, but let's just say it's 10,000 a month, 10,000 a year that they're saving. Watch. Still, if they were able to compound that, not just live on it, they're getting to that 1.2 million in 10 years. because they have that equity they can use and they don't have extra payments. Now they still have to pay for rent, but they were paying for a mortgage payment anyways, at least for the next 10 years. So why not sell the home, rent? And by the way, this is not a recommendation for everybody to go sell their house and rent. I'm just saying, if you got net worth, you got money locked in prison, maybe something can be done with it, right? Like I mentioned before, I had one guy that, doesn't quite qualify, but if all of a sudden he changes jobs, guess what? Now he has 300,000 from his 401k that could be used. Even if we reinvest it inside of an IRA, watch, even if he's doing that, and actually he's actually saving about this much, about 10,000 a year. Watch what happens. And this guy actually had a little bit. Now, this guy I was talking to you about here, like if he were able to tap and access the equity he has there, plus he's got a little bit of other savings he could be using, about 420,000, still over 1.2 million in 10 years, right? His goal actually is about 6,500 a month, right? He just needs 70,000. So what does that mean? He wants that 78,000, I should say, 78,000. Let's go back. He needs to get to 780, right? Well, look at this, guys. Okay, so give him about 5.5 years. We'll put the 6 months in. Ta-da, 790. So that's 79,000. He's got a 6,500 a month if he can just somehow move his money away from the 401k. Of course, this guy is actually about the same age as me. He's in his late 40s. He doesn't want to wait another 12 years. In fact, he even said, he's like, I want cash flow now. Okay, great. Well, let's say you have less. Let's say he paid taxes on that money, right? He pulled out, got a 10% penalty and tax on those things. Let's just make that number 320 that he's starting with. Now, the difference is this, right? Now he's got 320. Yes, he can still make more money here. Now that brings the number down for that 5.5 year goal. But this guy, by the way, wasn't even sure if he could do this. And by the time he's in his 60s, put it back to 10 years, he's already at $1 million. He's more than what he needs to be able to get that 6,500 a month goal. And if we go off of inflation and things like that, he's still up there, right? So still, even for someone like him who's had his money tied up, even if he cashed out all of his retirement money, paid a good chunk of taxes, still he has the ability to create passive income now. And that's the cool thing, is because even that first year, that 320,000, that creates 32,000 a year at 10%. What if he makes more? What if he can do better than that? Like there are some funds and things like that in our network that pay 1% a month. Is it guaranteed? No, of course not. It may be contractual, but anything can happen. There's always risk. Things can always happen, right? But 1% a month on 320,000 rather than making 32,000 a year, now it's making 3,200 a month, which is close to about 38,000 plus a year, right? Now it's a different story. Now, if he wants 6,500 a month at 1% a month, he needs $650,000. Not as hard to get to anymore, is it? Right? This is the thing. Many of you guys don't even realize how much hope you have in your situation. In fact, can I show you one more thing that's pretty cool here? So this is an example of one of my investments right now, real time. This is August of 2024. By the time you see this in September, this could easily be well over 11,000 a month right now. It can go up or down, but usually it's trending pretty much up, right? This is a business partnership I'm in where we're buying and selling raw land. Now, I had significant amount of money I put in up front. I paid for business costs up front, which gave me a nice little tax write-off on my taxes that year. And I threw in a significant amount of cash. In total, up front, put in about $300,000, okay? Put in this business partnership. I'm very passive. I'm just the financing partner in this. Those other guys, they're just doing the work. Half of that money really is going to pay for the cost, to pay for them to do the work. The other 150,000 was being invested. The difference is, though, over the last 3 years, I've had it reinvest over and over again. So as the cash flow came in from purchasing these land properties that we then do what's called seller financing back to other people. So we buy it wholesale, turn around, sell it retail. This is done much better. Even to zoom in more, right? One thing that's kind of cool is you can see one of these properties right here. Like here's one, the most recent one that just got done here very recently. $3,300 is what it cost to buy the land. Sold it to this person for $8,200, or yeah, over $8,200. So not quite triple, but about 2.5 times the value. And even at 0% interest, they pay it back over 6 months, generating $121 a month. That $3,300 of my money is generating $121 a month. This one over here, $3,100, sold for $5,400, generating $100 a month. This one actually has interest. This next one down here, $21,000, sold for $70,000 to this person. And then at 10% interest over the next 15 years, pays us $772 a month. For $21,000, generate $770 a month is great. Now I'm showing you this. There are no, I'm not giving any promises, guarantees, results always vary. They even vary in this thing too, right? But the nice thing is that this is generating good cash. Now I had to wait. I had to wait here. Okay. One, there is a wait list for one, our clients, and we only offer to our VIP clients that pay us our consulting, right? Because there's a 2-year wait list, and we don't want that wait list to be much longer. But what's so cool is that even for me, even if we factor that together, 2-year wait list plus another 3 years. Again, results may vary. You could do better or worse. But if you can get to 10,000 a month in 5 years with $300,000 out of pocket, that's not a bad deal, right? Remember, 300,000 in a traditional retirement plan would mean you're pulling out 9,000 a year. My 300,000 now after several years is generating over 10,000 a month, right? Almost 11,000 a month. Again, results may vary. No promises made here, right, guys? My point is this: is that hope and your freedom and financial independence may be closer than you actually think, but it's gonna require you to do things differently. It's gonna require you doing different things than your brother-in-law, your friend next door that thinks that their 401k is the best thing in the world. Well, I'll tell you something. I can already forecast the future. You already watched the other episode about the three lies of the 401k, right? You watch that, guys. It's already telling you that the evidence is that people aren't retiring well with these 401ks at all. They don't have 10,000 a month of financial freedom or independence. That doesn't happen. Not even after 30, 40 years. And the 401k has been around for everybody for now going on almost exactly 40 years to the day. Yet still we have people struggling because they just don't have enough. They'll blame you saying you didn't save enough, but that's not the case. The problem is you didn't save enough to do their bad strategies. There are strategies that are just the same old crap that hasn't worked yet, and somehow you think in the future it might be different. That's the definition of insanity, of doing the same thing over and over and expecting a different result. Don't repeat the mistakes of everybody else before you, of previous generations. Everybody has been living scarcely. They've been living on just enough. And that includes Social Security to help bail them out because they couldn't save enough to make up for the bad performance of their 401ks, even with the match. They couldn't make up for that kind of thing. But here, people are doing this every single day. People are creating financial freedom every single day, getting real assets to back up their investments, and it generates real cash flow. Guys, it's very possible. Now, can your situation be done in 10 years or less? I don't know. Honestly, because I don't know your situation right offhand. All I would say is this: go to moneyripples.com, try the passive income calculator to at least see what could be created in the next 12 months or so, right? 12 months after you've invested. That's the key thing, right? Some people are like, oh, after 12 months? Yeah, you actually have to invest the money and get the cash flow for 12 months to get that number, right? But that's what it could be per year. Again, results may vary. You could be more or less. You put in the wrong numbers, it could be less or more. I've had both situations show up when we've actually talked to you guys one-on-one. But if you're getting at least 15,000 a year as a result on that calculator, it's probably time to talk. And especially if your goal, if it even gives you a number that's close to your goal, it means you might be within a few years of being able to hit that goal if you just do it differently. That's the thing, guys, is that I can guarantee you this. You take the traditional path of the usual 401k and retirement savings that every financial advisor has you do, and you have a very, very small chance of ever winning or even having financial independence or any kind of freedom. Very small chance. You have almost a 0% chance of success. Why would you keep doing it when you at least have a chance here? I'm not saying it's a 100% chance. You could do some of these things and mess it all up. It's possible. Yes, you could. But when you surround yourselves with the right people and you have the right perspectives and you're looking at your money from a different way, what ends up happening is you actually end up elevating to that level. Guys, I've had to do it twice myself. It works. I've had clients do it as well, and it's worked for them. And many of them are on the path already. They're already ahead of you guys. They're already beating you. Some of you could be beating them. It just requires you to do something different. I don't care if you use us or something or do it on your own, right? That's totally up to you. But I'm here to tell you there is hope. And you have been living too long trying to get results. And maybe you've been trying to do real estate investing yourself and you're not quite seeing the results you thought you would. Maybe you could do it a little bit better. What if we could just add a little bit more? Guys, there is so much more hope. And this is the ripple effect I'm here to create, because I know if I can get you to be financially free and liberated so that you're not worrying about paying bills every day, that you can actually say, you know what, I can buy whatever I want and not worry about the price tag. I can buy it basically because I want it, not because I think I can afford it. You can have a new level of freedom that allows you to even have more time with family, friends, your causes, your mission. I hope you have a legacy that you hope is bigger than just you, where you can leave an impact in the lives of others. That is what it means to be a Rippler. Those are the people we serve. If you're somebody that just wants to get rich off this, please don't even talk to us, right? If you're just trying to get rich, yeah, we can help you. But the truth is, I want to work with people that are wanting to be someone who can bless other lives, that they can create a ripple effect in people's lives, doing something more than just providing for their family and be able to buy all the crap they want. There's plenty of people showing you all the flash and how you can buy your own private airplanes and jets and boats and crap like that. That's not us. We're all about what kind of difference can you make in your own and your family's life, create a new legacy for your family to learn from, where you can set them up for many generations to come. And you're also here to make a difference in people's lives too, that you want to make an impact, whether it be through charities, community efforts, heck, even through business means or whatever it might be, like what I'm doing, right? Like I'm using my business as a platform and reinvesting my money back in to be able to serve more of you all the time. That choice, that's the ripple effect I'm excited about. That's why I wake up every day. That's why we're doing these episodes now going on over 10 years, over 850 episodes, just so that you can make a bigger impact. But guys, that's what I want for you. You have hope. There is hope if you're willing to take action upon it. Guys, make a wonderful, prosperous week. See you later.